Welcome to the Real Estate and Wealth Podcast, your go-to resource for navigating the world of real estate investing and wealth creation. This podcast is brought to you by Calvert Home Mortgage Investment Corporation, your trusted, caring, and responsive short-term mortgage lender in Alberta and Ontario. We explore strategic and tactical solutions to elevate your real estate portfolio, drawing insights from seasoned Canadian investors and trusted advisors. In each episode, we dive into various aspects of real estate investing, including market trends, property analysis, financing strategies, risk management, and much more. Whether you're a seasoned real estate investor looking to expand your portfolio or a beginner taking those first steps, this podcast is for you.
Today on the pod, we have Brendon. Super excited to learn about the BC market and all the key insights that you have to share with our audience. I'll leave it to you to give an overview of who you are, what you got on the go, and a little bit about yourself.
Sure. Brendon Ogmundson. I'm the chief economist of the BC Real Estate Association. We're an industry association, so we represent our member boards who represent the 26 or 27,000 realtors around BC. We do everything from professional development to government relations to what I do, economics, which is just sort of reporting on what's going on in the BC economy, the BC housing market. And we do a lot of kind of more like think tank kind of research pieces as well that we put out a few times a year. So that tends to keep us pretty busy. Obviously, there's always a lot of interest in the housing market, especially in BC. And it's kind of always interesting.
Fantastic. Touching on that, how is BC right now? What are you kind of seeing in the market?
Still pretty slow. So when we look at how the housing market in terms of like sales are doing in BC, I think there's a prevailing sense that even though mortgage rates are down pretty significantly from the start of the year, the end of the year over 6% for a 5-year fixed, we're around 5% now. So 5-year fixed rates have come down a lot. And yet we haven't really seen that stimulate a lot of extra activity in terms of sales. So there's this prevailing sense that I think that buyers are really kind of waiting on the Bank of Canada. I think that's the prevailing narrative, is that maybe after last year when the bank was on pause in January and then ended up raising rates again in June and July, that's maybe made some potential buyers a bit gun shy about getting into the market before they really see the Bank of Canada acting on rates. So I think that's sort of like the narrative right now anyways. What's holding back sales is just really waiting for the Bank of Canada to cut rates.
And you're seeing that slowness. It's interesting. In Canada, we talk about the Canadian real estate market, which is really, we all know real estate markets are so localized that to make those blanket statements is foolish. Although we need to sometimes make those blanket statements. Are you seeing any markets that are doing anything different than that common slow theme?
It's really like smaller, more affordable markets that are basically trending kind of normal. So right now, big markets like Vancouver, Victoria, Kelowna, markets like that are a little below, like 10 to 50% below like average 10-year average sales, a little weaker in the Okanagan. Some places in the interior, like the Kootenay or places in the north, look pretty okay. They're just sort of trending right at long run average levels of sales. But most larger markets are seeing sales still underperform compared to long run average by a considerable amount. The difference in the last couple of months has really been on the listing side, where we're starting to see new listings really pick up. They were, in Vancouver, we had the lowest year for new listings in 2023 since 2005. So some of that is like making up for a lot of listing activity that didn't happen last year. But some of it's just maybe, sellers getting ready for the Bank of Canada. If they think demand's going to return in the summer, a lot of listers are getting ahead of that.
So we're starting to see listing supply tick up in the major markets.
Yeah, and so total inventory has been extremely low, really since the pandemic. It's taken about 4 years just to get back to 2020 levels of active listings. So we had pretty low active listings already back in 2020. They got like crisis low, like 15,000 listings for the entire province at one point. And we're just sort of now getting back after about 4 years to where we were in 2020. So it looks like a big increase. We're still 10 to 15,000 listings lower than where we kind of need to be for markets to be in like a healthy balance.
And what would, like, from a month's supply standpoint, what would that be ballpark? In terms of, we're back to average supply, what would that look like as a month's inventory?
We would like to see about 5 months of inventory. So, we usually use the inverse of that, so a 20% sales to active listings ratio. Anywhere between 5 and 7 months is usually pretty healthy. So if we were back to like normal levels of sales every month in BC, an average year in BC is about 85,000 sales. So if we had like 7,000 sales or so every month, seasonally adjusted, it would be nice to have something around 40,000 active listings in the province instead of like trending around 30 that we've been at for a while.
Okay. And then, like you mentioned, the smaller, more affordable markets. How are you looking at affordability, particularly in the GVA, which, when something that we follow really closely is income, immigration versus home price, which is kind of an affordability calculation. What's happening in the GVA as it relates to affordability?
It's very difficult, and it has been. It's been very difficult in terms of affordability in Vancouver for a very, very long time. It's kind of fascinating. Vancouver is the one market that didn't really have any correction at all once the Bank of Canada started raising rates. So, same story we saw everywhere across Canada during the pandemic. A lot of outlying areas saw prices jump, 60% in some cases. If they were, just outside, places just outside of Vancouver, even 2 hours outside of Vancouver, saw these enormous price gains that they gave back some of that once the Bank of Canada started raising rates. So my hometown of Chilliwack, where I grew up, I think prices went up close to 80%. Then they fell about 25% and have kind of flattened out since. In Vancouver, as of this week, we were about $800 higher than the previous all-time high. So peaked in early 2022, and gave up about 5 or 10% of that once the Bank of Canada started raising rates, and now we're actually back above that peak. So prices aren't really moving much at all. They've kind of gone sideways or even risen a bit in Vancouver. Whereas if you go a little bit outside of Vancouver to like Surrey or Langley, markets like that, they're still down 15 to 20% from their peak.
Right. So and those are the markets where you saw greater increases coming into the monetary tightening.
Yeah. So those markets went up a lot, gave back some, and have since basically just been sideways since the summer of 2023.
Which is basically what we're seeing in most markets outside of Alberta. Makes sense. And then going back to the affordability issue, we'll call it for lack of a better term, and a lot of engineering that goes around that issue. Let's get into some of your thoughts on monetary policy.
Yeah, so obviously everyone's kind of waiting for the Bank of Canada. What's keeping the Bank of Canada on the sidelines is still inflation that's slightly higher than where they banks mandated to keep inflation at 2% over the medium term, between 1% and 3%. We're seeing CPI trending just under 3% in the last couple of months. The really fascinating thing is if you strip out shelter costs, so we're running well below target. And so you can get yourself in a bit of trouble by taking out the things that you don't like from measures of inflation to show that inflation's lower. So if we had a situation where shelter costs were rising very quickly, and they're 30% of how we calculate inflation, they're 30% of the CPI, they're a big weight. And it breaks down to about 2/3 of that 30% is ownership costs like mortgage interest rate costs, home prices, other costs of home ownership. And then the other third of that 30% is essentially rent and the cost of renting. If we had a situation where those shelter costs were rising really rapidly because the housing market was massively overheated because there was so much demand, if we were in like a 2021 situation, there might be a role then for the Bank of Canada to play in tightening rates and slowing that down. We're in a situation now where shelter costs are rising for reasons that are entirely outside of the Bank of Canada's control, or are directly driven by the Bank of Canada. So there's a number of factors. One, mortgage interest rate costs obviously just reflect monetary policy. So if the Bank of Canada is raising rates or expected to raise rates, bond yields start to rise. That gets passed through to mortgage rates. Obviously, that directly affects mortgage interest rate costs in the CPI. The other is if borrowing costs are high because the Bank of Canada is tightening policy, makes it really hard for developers to get new units to the market. So it impedes supply. Obviously, that drives shelter costs higher as well. And then thirdly, on the rental side of things, we've had a massive influx of rental demand through non-permanent resident immigration. So we've had a lot of temporary foreign workers and international students, 800 and something thousand in 2023, like quadruple what's normal. And those are a lot of people who put immediate demand on the rental sector. Obviously, students tend to rent, temporary foreign workers tend to rent. As a result, we've seen rents really rise. We have vacancy rates that are extremely low all across BC, and that drives inflation as well. But that's really outside of control of the Bank of Canada. Raising rates doesn't fix poor immigration policy, and it's probably impeding supply. So you could make a very good argument that right now the Bank of Canada should look past those shelter inflation costs, look at CPI X shelter, which is running at like 1.5%. It's actually negative if you look at it on a 3-month basis. So prices are actually down from, if you compare them to 3 months ago. And by that measure, we probably should have cut rates in April and certainly should be cutting rates in June.
So two things. The 800,000 non-permanent residents that you referenced, was that a 2023 number? So we had 800,000 non-permanent residents, plus we brought in 471,000 permanent, and this is Canada as a whole, to a country which has already been strained on housing stock.
Exactly. So there's a total mismatch in our immigration policy and our housing policy. I mean, I'm all in favor of immigration, but we need to also have, we should have been preparing for those levels of immigration for years because it takes a long time to build enough housing. So we really should have had these sort of supply policies in place over the last decade if we were going to, through policy, generate this kind of population growth. Instead, we've had massive population growth at a time when we have never had such a shortage of housing with obvious effects. We've just made affordability even worse for everybody.
Right.
And I know there's been quite a few changes with short-term rental legislation, flipping tax, foreign buyer legislation. Do any, from your perspective, has this had an impact in a positive or negative way in terms of investment into BC real estate?
So over the past decade, we've had a number of policy changes, all directed at reducing demand. So we've thrown a lot of firepower at the demand side of housing, whether it's the stress test or a minimum qualifying rate for mortgages or changing amortizations, a lot of different things on the regulatory side for mortgages. And then provincially in BC, we've had probably close to a dozen different taxes, whether it's the foreign buyers tax, the speculation and vacancy tax, the empty homes tax in Vancouver. We now have a flipping tax. We have a sort of a luxury tax for homes over $3 million. A lot of different taxes, and now of course we have a federal foreign buyer ban. So over that period when we've had all of this demand side policy, prices in BC have doubled. So you can't really say that housing policy in the province has been successful. The most charitable you can be is that without all of those policies, maybe instead of rising by 100%, maybe prices would have gone up 150%. I don't know. But that's the most charitable you can be. You certainly can't say that those policies had sort of solved or even went any distance to solving our affordability problem.
Interesting. Yeah.
I want to definitely get into the flipping tax because certainly we support real estate investors who are buying underutilized housing stock, go in, add value through renovations, a lot of times add density, putting in a basement suite, garden suite, and then go back to the market and either sell that or rent that. Is the anti-flipping tax going to discourage that type of behavior, and how?
So in BC, so there's already a federal anti-flipping tax that says, if you're designated a flipper and you sell your house within a year, you pay business income
Right,
rates.
which everybody's already doing. Like that's just unless you're evading tax. And it's not really anti-flipping tax. It's just CRA rules.
It's just political, like the same thing as our flipping tax. So the flipping tax in BC is a little bit worse in how it's structured, and it has some consequences in that for our purposes, a flip is defined as a sale within 2 years, which is an awfully long time. It has a lot of exemptions, thankfully. And it's kind of graduated. So after a year, it's a 20% tax, and after a year, that gets sort of, the longer you hold it, the less of a tax that you pay. There's exemptions for all kinds of life situations. So if you look at like data on why people move within a 2-year period from the Canadian Housing Survey, it's everything you would expect. Changed jobs, family size changed, whatever. And so there's a lot of exemptions for that. If you get divorced or you get married or you have a kid, whatever, you're going to meet some exemption on their criteria. You won't pay the flipping tax. The other one that's really important, if you add a unit of housing, so if you put something if you go fix something up and rent it out, put it in a basement suite, rent it out, then you'll also be exempt. So there are exemptions for the types of things we want to see, which is adding more units to the rental stock. So that will be exempt. There's so many exemptions that what you're really only going to capture is probably like true, like short-term flipping, stuff that I would classify as sort of the harmful,
like speculation,
which is like investors coming to markets that are already overheating and just taking advantage of very short-term market conditions, like buying something and selling.
They're adding no value. Right? They're just purely buying and holding, just selling in hopes to make a profit. Which I agree.
Exactly. Which is, again,
that is an activity that adds zero productivity and zero value.
Yeah, and it is already taxed. So you'll pay a capital gains tax or business income tax on that behavior as well. We're just taxing it more. That's a really small share of transactions, and it's a pretty constant share. It's like around 1.5% of in Vancouver and Victoria of transactions are within 6 months, buy and sell within 6 months. So it's not a huge part of the market. So when we analyze these policies, because the exemptions are what they are, most of the people that are going to end up paying this tax are probably those short-term flippers. So we expected to see like maybe a 1.5 to 2% reduction in sales and very, very minor impacts on prices. The bigger problem, though, is because that 2-year exemption period, it's pretty easy to think of a situation where a seller that has only bought in 18 months later is looking to move, but doesn't fit for whatever reason the exemption criteria, because there's no exemption for like I just want a different house, like I want right like that's not allowed. So you can imagine someone in that situation is just going to wait. And if you have a lot of people delaying their listing, it just makes markets tighter, and you could have a situation where prices actually rise more with the tax because of all that deferred listing activity than without it. So there's a chance that the whole policy is totally counterproductive.
Interesting. So just so I can summarize that, this is around the principal residence exemption on capital gains, and it makes it even more restrictive than what the feds released 9 months prior to. So for those individuals who are real estate investors and already paying corporate tax, this does not affect them.
No. So this is in addition to any federal taxes too. So you could find yourself paying the 20% flipping tax and capital gains or the anti-flipping tax. You could pay twice essentially on the same transaction.
Got it. I think that. Well, I know that's helpful for me, so I hope that's helpful for some of our listeners.
One of the good things is, at least for pre-sales, they did in the legislation make it so that the date of when the clock starts on the flipping tax on that 2 years is when you sign the contract for the pre-sale. So there was a concern that would be completion, right? And then you have people that had maybe no interest in taking possession, then they have to wait 2 years before they can list it. In this case, it's on when you sign the contract. But then if you assign it and you buy an assignment, clock starts over again.
So you really won't assign it per se. It'll just force people, which is I think right. I don't know what is from the time developments are being sold to completion in BC. Is that about 2 years right now, or is it on average?
Yeah, it's the average for an apartment is about 2 years. Some can be obviously longer if they're complicated or very tall buildings or very complex buildings. They could take longer, but the average.
Because developers do need that. That is a form of speculation, sure, but in order for developers to be confident to obtain the financing, they need to pre-sell, and whether the government likes it or not, a good portion of those pre-sales are to people that are likely going to sell.
Well, yeah, and you can't actually get something built without about 70% of the building being pre-sold. So, and we need to finance. If you take housing targets seriously, we have to finance about 500,000 units over the next 10 years to hit the provincial government's targets.
We need to build. 500,000 units annually?
500,000 units over a 10-year window.
Oh, just in BC. Okay.
Just in BC, yeah, much bigger, obviously, in all of Canada. But for the provincial government's targets, which are a lot less aggressive than what you hear from the CMHC reports on what we would need to build, which are in the stratosphere of fiction, because it'd be absolutely impossible. But the BC government ones are a little bit more in the realm of possibility, but it means attracting a lot of financing. It's got to come from somewhere, and the more we tax investors, the less likely they are going to want to invest in building all of this housing.
Yeah. So 500,000 units over the next 10 years need to be brought on board from the provincial government's standpoint. How many were brought on board over the last 10 years in BC, for example?
We average about 30,000 completions a year.
So 300,000 over the last 10.
So our kind of baseline over the next 10 years is probably on 300,000 units. So we have to build about 250,000 more units than what we would expect in a normal.
So that's basically quick math, an 80% increase, which is unless we have.
It's significant, right? Yeah, the most we've ever.
The entrepreneurial drive is not happening.
Yeah. So the most we've ever completed in a single year in BC is 42,000 units, and we need to average 55 to 60,000 completions every year. So it's a big lift to get there. There's some complicating factors. One being that about 8% of our workforce is in construction. The most it's ever been is about 9.5%, I think, during the Olympics. So we have to get back to maybe a 10 or 11, have a record high amount of people working in construction to do all of that extra work at a time when about a fifth of our construction labor force is over 55.
Yeah, we got a demographic
so
issue
we're going to be hit with some retirements, and to make it a little bit worse, our productivity in construction, so how much output we get for each hour of construction labor, has either been flat or declining for several years. And now we're going to replace a bunch of really seasoned people in trades that have been
likely more productive
for 25, 30 years
on average.
Yeah. Going to replace them with young people who are just learning what they're doing and aren't going to be nearly as productive. So we got some real challenges in hitting those targets. Not to mention, municipal governments that might not be on board.
And then I guess the leading indicator to the pipeline of that labor force would be who's in trade school. And I think that's not increasing at a rate that we need to see it.
Probably not at the rate we need. There's somebody doing more. Like I know at my own kids' high school, like they now will there's a lot of kids where like they give them the choice in grade 11 to go to a different school and pick a different stream for if they want to be an electrician or go into like carpentry or plumbing, whatever. So they are trying at least to do more to get kids interested in trades and get them into those programs. But we're probably going to do more to get people really interested, get kids really interested.
And from your perspective, are there any other like top 3 things that you recommend or in order to help attribute to this solution? Because it seems pretty bleak, to be honest.
Right. No, this is why every speaking engagement I have, I'm like, you guys are going to be really depressed at the end of this, given where affordability is at and what our chances of solving it anytime. We're doing, fortunately, we're kind of doing all of the right things. So like the BC government's Homes for People plan has a lot of really positive things that economists have been asking for over a decade, like high density around transit nodes, right? So if you've got a SkyTrain station, then you should probably have a lot of towers around it, right? So now like zoning those areas for like a lot of density. Or zoning single family homes to be able to be redeveloped into multiplexes. So a lot of stuff that we've been asking for, like most of Vancouver has been zoned for single family homes for decades. And it just doesn't make a lot of sense to have giant lots right near downtown, right? Or like a 10-minute drive
the city
to
needs to
downtown.
evolve. The city natural evolution, especially where it's constricted in the way that Vancouver is. Yeah.
So we're just zoning for like mansions, and like that doesn't really make a lot of sense for a lot of cities. So fortunately, we're moving away from a lot of those policies. It's just that we should have been doing this 10 years ago because it takes a really long time. And that's the other thing we need to fix. So the other thing we need to fix is like we shouldn't have so much intervention by municipal government in like design. So when you take your building permit and they're like, well, we don't like, the design of your balcony or something. And they're like, it goes back into the pipe. You got to go back and fix a bunch of things. Instead, there should be like just pre-approved. Like if you're going to build this, stamped, start building as soon as possible. We're not there yet. So speeding up that whole development process. So it's not in like this delay pipeline for 2 to 3 years, and then you get a permit, and then it takes another 3 years to build. It can take like a whole generation before you actually get an apartment completed, right, from start to finish. You can't have projects taking 5 to 7 years. It's too long. So anything we do to speed up all of that pre-development process, somehow speed up construction through things that I'm not an expert in, but any kind of manufacturing off-site. Things like that would be huge helps, I think, compared to the way we're doing things now. Like something has to change, so we can't like brute force our way out of this. Given like can't just throw more and more labor at construction, so we just don't have the resources. So hopefully there's some like technological improvements, some productivity improvements that we can use to just get stuff built way faster and safer without a compromise.
Labor is a key component that we need to fix. We got zoning and approvals, call it the bureaucracy as a whole, we need to fix. And it seems like finally the feds, the provinces, and the municipalities are paying attention to that, which directly and indirectly affects the profitability of these projects. We are hopeful that there's some technological improvements which will impact, let's call it, productivity. Any other key things that need to come up to solve this housing shortage?
I think those are like the really big ones. When you think of like, and just fixing the whole affordability problem. I mean, when we look at like, what goes into measuring affordability, incomes, nice maybe if we had overall kind of productivity growth, and incomes could grow a little faster, our economy could grow a little faster. That would help maybe income start to catch up to prices. Rates are going to come down, but if we kind of look at where the Bank of Canada's destination is for their overnight rate, it's probably 2.75%, kind of right in the midpoint of their preferred range. That implies a 5-year fixed rate of like 5% long term, which is pretty close to where we are right now. So borrowing's probably not going to get much cheaper than it is now. So if we're not getting a lot of help on the income side or on rates in terms of affordability, the only thing we can really do is just slow price growth. So in BC, on average, prices have been growing like 6% a year every year. Obviously, tons of up and downs, but on average,
compounded, which is huge.
Yeah, which means that prices double every 10 years, right? Which is really unhealthy for a housing market. So we need to slow that rate of growth to something more sustainable. The only way you're going to do that long term is to add a lot of supply. But again, supply takes a very long time. So when we do these sort of simulations, in like affordability went from like 30-40% of income in toward like pre-pandemic to like 60% of income, a mortgage payment as a share of income during in like 1 year in 2021-22. It might take like close to 15 years to undo like 2/3 of that increase in sort of the affordability, unaffordability, because supply takes a really long time. It just takes a really, really long time to work its way through that whole system.
Yeah. And then, so you talked about productivity as it relates to income, which in terms of our GDP per capita, we've been in a call it recession for lack of a better term. Any thoughts on what we should be doing different to bring up productivity, to bring up incomes as a country?
Yeah, like all the usual stuff that economists have been saying for a very long time and stuff that we've tried. And, this isn't it's got a lot of like exposure recently, but it's not Canada's productivity struggles aren't new, and are some things that like economists have been thinking about in Canada for a very long time. Like our downtrend in productivity has been happening for like 20 years or more. So like the things that are supposed to work are like lots more investment in capital equipment, right? We invest very little as a share of GDP in machinery and equipment, and very little in R&D. Why? Probably lots of reasons, right? So one is like limited amount of capital, perhaps in Canada. Like if you're a bank, you're lenders, and you're thinking, well, I can lend my money to this company with a somewhat risky project, or I can lend my money to consumers to remodel their bathrooms, right? And generally, and then we know they're going to pay us back and whatever, decent rate of return. For whatever reason in Canada, we spend more money on renovating our homes than we do on investing in productive equipment. That's like, to me, it gets classified as a residential investment. To me, that's consumption. It just tells me Canadians love to renovate their homes. Like it's about 3% of GDP, I think. In the US, it's about 1.5%. So even more than they do in the United States. Canadians love to invest to remodel their bathrooms and kitchens. I'm not sure how we make that less attractive. It just seems to be almost a cultural thing with Canadians. Maybe make it more expensive. I don't know. But we certainly are more interested in doing that than in investing in R&D. The other thing is, I think companies in Canada are just too sheltered. So we have a lot of these like oligopolies that don't really have to compete. Our telecoms don't really have to compete, barely even with each other. Our banks don't really have to compete. Our airline doesn't really have to compete. And if you're not really competing with anyone else, then why would you invest in getting better at your job, right? So like, why would we buy this very expensive equipment or adopt some new way of doing something if we can just keep doing things the way we're doing now and it doesn't hurt us at all because we're not competing with any other businesses? So that might be an issue as well. Things like the depth of our capital markets, our inability to optimize, where our labor and capital goes, our lack of competition. It's all of these things, and I don't know if there's like a simple solution like we'll just lower corporate tax rates or just lower the top personal tax rate or something. I don't think that's probably going to solve our problems. It might be a little bit deeper than that, and we haven't come up with a very good solution yet, or at least one that's politically palatable. Otherwise, I think we probably would have seen some action at some point.
Yeah. Well, I don't. That was a great discussion on that front. I don't want to delve too far into that, although I do have a lot of ideas around. We are a resource-based economy. I think we do a poor job emphasizing mining, energy, ag, which hopefully,
in some cases too, this could be like a timing thing. Like we just finished the TMX pipeline, like just completed, right? Building those projects takes a long time, and while they're being built, nothing is happening. We have this with LNG in northern BC as well. Like it's a lot of capital up front with no output. But once those things start, once we turn on those pipelines or turn on those terminals, there's a lot of output without very much input. We could actually see, because of those investments, productivity really start to increase in terms of like output per labor hour. It just takes a very long time when you have these big capital projects that don't pay off right away. So we could be surprised to the upside in the next couple of years about productivity growth, at least in this part of the country.
All right. That was fairly macro. I know Ryan has a lot of really good questions related to, again, our listeners, although this is very relevant to our listeners, but getting more micro on real estate investors who are operating in BC again, who are looking to revitalize communities, provide supply, that type of stuff. Ryan, what things are you curious about?
We're just curious if you see any trends on individuals who do real estate invest. Are there any trends of them focusing on either single-family detached homes, condos, townhouses, where investors are finding the most value as it relates to BC?
It's a good question. I think most value, I mean, honestly, a lot of the investors I talk to are more interested in putting money into Calgary because it's still pretty affordable and it's very friendly to landlords versus BC, which is very tenant friendly and it's just very expensive to get into. So right now it's difficult because prices have gone up so much. There's not a lot of like what you would consider like real value for investors. I think if you're looking at like places in the Kootenay, like the interior or the north, maybe there's, but then you get into some demographic issues where like, the aging populations and not a ton of migration to those areas. It's really hard in like a place like Vancouver for like individual investors. Because even if you're looking to say fix up an older house in East Vancouver or something, it's like $1.5 million to get in, right? So like your costs are so high up front, it means your margins are going to be pretty small once you put all that work into it and you're carrying the costs at 5 or 6%. I think it's a pretty difficult market for that type of investment right now, I think.
Yeah. And typically when it comes to those higher end purchases, usually, the end user is going to do that work themselves. They're going to do custom jobs. So because that price point, It makes sense. And it makes sense why those, let's call it real estate value investors, are focused on the smaller, more affordable markets, even pushing out of the greater Vancouver area. Like, I don't know, is Chilliwack greater Vancouver area? Like, what is further than Chilliwack?
Further than Chilliwack is like Hope, and then you kind of get into the interior. Chilliwack is its own CMA. Abbotsford's its own CMA. Abbotsford's sort of further west than Chilliwack, or further east rather. West. So yeah, Metro Vancouver sort of encompasses Surrey, which is almost as big as the city of Vancouver, and they kind of out that way, kind of edge of Abbotsford.
And what resources do you recommend people to stay up to date with everything going on in BC that you think would be popular for real estate investors?
Yeah, good question. What
like other capital investment projects, that future development projects that are going on in BC? Just anything related to that.
Yeah, that's a really good question. I mean, we mostly deal in the resale stock, so anything that we put out, generally about trends in the resale market and what we're expecting. We follow development closely, but more so in like very aggregate terms, so not so much with an eye on like where are the best pre-sale investments or like that. So we have lots of resources. You can go to our website, and we report on monthly stats around BC every single month. We report on all kinds of economic indicators. So that's generally a pretty good resource for investors too. Like the biggest thing is always like where are markets where we're expecting a lot of growth. So I'm always still talking about a market like Surrey that's going to overtake Vancouver in terms of population. So if you combine some of those demographic trends with what's the supply situation in those markets, right? So if you've got markets that are like always pretty low in terms of active listings and maybe aren't generating a lot of new construction and are going to have really high growth, those tend to be markets that really, really pay off over the long run. And a market like Surrey is going to converge probably to Vancouver pricing at some point as it's very young, it's growing very fast. Even markets like Chilliwack, Kamloops, Kelowna, 3 of the 5 fastest growing cities in Canada, and places where we haven't done a great job of increasing housing supply. So anywhere you have just massive demographic pressure, like a place like Kelowna, especially, or Nanaimo even, that has not only like a lot of young people, so they have this sort of bimodal demographics where their populations are all either in their early 30s or like early 60s. So you have like tons of demand from retirees and tons of demand from millennials aging into their household forming years. That really puts a lot of pressure on the housing stock, and they're sort of relentlessly growing. So markets like that are where price appreciation is probably going to be pretty strong. Okanagan's really weak right now for whatever reason. It's one of the weaker markets, so maybe some value there right now. But generally, like it's really hard to do poorly in markets that are expected to really grow their populations and not grow their housing stock to keep pace.
Something that we always hide, which is look at where the labor and capital is flowing and is likely to continue to flow, and those should be good indications of strength in the housing market, and in turn managing your downside risk.
Anything we didn't touch on that you think would be valuable insights for our audience?
I don't know. I felt like I talked a lot, so hopefully there was some value in there that people can get.
Yeah, I'm looking through our list that we wanted to touch on, and I think we've hit on everything. And I know that I've learned.
Mm-hmm.
So hopefully in turn somebody learned something other than myself.
Someone out there learned something.
100%.
That's a win.
Really appreciate your time. If people are interested in following you, staying up to date on what's going on within BC, where's the best place for them to get in touch with you?
Not really on any social media besides like LinkedIn, but I do post some interesting research and charts and stuff on LinkedIn every once in a while. Or you can go to our website, bcra.bc.ca, where we publish all of our official research and whole bunch of different indicators that people can look at if they're interested in tracking how the BC economy is doing or how the BC housing market is.
Perfect.
I do have one more question.
Here we go.
That I forgot to ask. If you're able to share some of the larger research projects that you're looking into.
I'm in a bit of a dry spell for research. One of the things that we're looking at is really around the labor force side of getting supply built. Like, how much of an increase in the construction workforce do we need to actually build the amount of housing that we would like to build? A lot of those kind of questions. What kind of combination of productivity growth and labor might we need? Just sort of like to narrow down what the numbers are in terms of like, do we need to hire 200,000 more people in construction? 75,000? We don't really know, right? It's just sort of like it needs to go up to get the amount of supply built. So that's sort of the one we're kicking around and just trying to like really nail down those numbers. So I've been a little bit lazy in getting that research done, but it's on the.
Well, we've talked through some of that at a high level as it relates to the demographics and what we have in the pipeline for labor, and I know for certain that should influence immigration strategy. I don't want to say policy because I think we need a strategy around immigration, which I've not seen. But thank you for that last question.
Thank you.
Awesome. Fantastic. Have a great day. Thanks for the time.
All right. Thank you so much. Great to be here.
Thanks so
Thanks for the
much.
invite.
That wraps up another episode of the Real Estate and Wealth Podcast. Be sure to hit that like button, share with fellow real estate enthusiasts, and subscribe to stay in the loop on all upcoming episodes. Get in touch with the team at Calvert Home Mortgage Investment Corporation by calling them at 1-888-752-4642 or email admin@chmic.ca. The opinions expressed in each episode belong to the individuals featured and do not represent the views of Calvert Home Mortgage. While we provide valuable insights, consulting with qualified professionals ensures that your unique financial circumstances are carefully considered, aligning your investments with your long-term objectives. Calvert Home Mortgage Investment Corporation is not a financial advisor, and we cannot advise you on making investments. There are risks to investing in real estate and the potential that you can lose all of your investment.